Davos is still underway, but markets are already reacting, from geopolitical tensions and shifting trade talk to tech, AI, and commodities. What are the real takeaways so far, and how could they impact financial markets? Joining us to break it all down is Alex Ridgers, Global Head of Retail Dealing Desk at StoneX. Welcome back, Alex.
Hi, Joanna.
So let's start with a little bit on Davos. Has anything been standing out to you, and how are the markets reacting to it so far?
Well, usually Davos, it's not a sort of meeting where decisions are made. It's more sort of narrative reinforcement, as want for a better term, in the idea that leaders are able to sort of push their rhetoric, what they want to say, what they want to get across, to either disrupt or actually just calm things down and actually tell people that things are okay, things aren't as bad as they seem.
I'm laughing because I can think of one particular person.
Well, I mean, and I think on the whole, generally, it's been good for equities as we come to the end of the week. So we're getting this idea. I've seen it bandied around a lot of sort of the geopolitical risk premium, i.e., what's either holding back indices from where they should be, or what's sort of putting up prices just from this idea of tensions, what could happen in financial markets. Mark Carney's been very vocal at the moment, calling it sort of the great power rivalry that's sort of happening around the globe, from everyone being a sort of at peace and happy to trade, to now sort of seeing these things broken up. But actually, on the whole, I think Donald Trump's comments were positive, and I think he generally did a good job. He sort of stepped back from the brink, as it were, regards Greenland, and sort of satisfied that sort of European US sort of mix. So when we're looking at trade and again what Greenland could have done, I don't think either. We always talk about Trump saying, we're importers, we're always importers, therefore we're adding tariffs. But when you actually look at the divide between imports and exports between Europe and the US, it's a real mix. Goods go into America. We're talking about, again, the big French firms, the luxury firms, wines, etc. But actually, when we're talking about services, it's going the other way. So the net is I think it's like $50 billion, which is not actually that much. But actually, there's 180 billion of extra goods going into US, and actually about 150 billion of services. So Trump, the Apples and the like, the Netflixes, the services that are going to Europe, neither party wants to disrupt that.
Right. So that's good, because then we won't have to use a bazooka, the bazooka of tariffs, like Ron said. Okay, what about in the long term?
Yeah, so that's sort of short term, everything's pretty rosy and fine. But what we've seen, and I think it was Carney and a few other leaders, but particularly Carney, he's sort of suggesting, I think he's firmly sort of mentally at war with Trump. And I think what we're seeing, I was reading this sort of, it was like a balance of power hypothesis, which was fascinating. All through history, nations have always rallied against whatever the big power is. It's happened since the dawn of time. But actually, the Cold War broke this, where I suppose the US, from being benevolent and actually almost being the keeper of the peace, almost as being seen as that, actually created allies for the first time, where the big, powerful sort of big dog is actually gaining allies, and gained 70 countries as sort of their not their puppets, but under their sort of protection.
Yeah.
But I think what we're beginning to see in the long term, and particularly if this is coming from Canada, is this unwinding where, up until now, we've had a year of President Trump in power, and generally countries have tried to sort of satiate him, tried to say, look, okay, we'll do whatever you want. But they said, I keep talking about Carney, this is what really struck me, that they're now going, actually, we're not going to do this anymore. We can placate you as much as possible, but you're still going to throw it back in our faces. So what I see from this is, what we're seeing is the real desire for the different blocs, and particularly like Europe now talking to the South American bloc for trade deals, everything really trying to move around Trump. And this sort of predatory leader is going back to that sort of balance of power hypothesis that they're trying to get away from the main body.
Okay, so let's bring it back to investing then, and put playground dynamics to the side. What should we be investing in?
Well, this is it. We were talking about the balance of trade between goods and services, and Europe will know it's totally reliant on the Apples, the Googles, the Amazons, etc. of this world.
Yeah.
So how do we get around this? How do we use that for positive investing? And my take is European tech stocks.
Yeah.
So could be completely wrong, but it's purely my view. But we could be investing in individual companies like ASML. They're huge. There's a few sort of big Dutch semiconductor manufacturers and SAP, a few others. But in reality, there's a lot of depth, and I would hate to be picking the wrong one, if you see what I mean. My sort of idea is just find the stocks 600 Euro stocks, tech 600, and just sit in that. I mean, again, not investing advice. Could be right, could be wrong.
Not investing advice.
Not investing advice. Purely my
brain.
But that's my thinking, that actually Europe is going to want to wean itself off of the reliance on US tech and US services. That's the perfect way.
Anything else coming out of Davos that has sort of taken your attention, especially like in the tech department?
Yes, I suppose tech was always going to be quite prominent, and it always is. AI is again a complete mixed bag, and I think we've seen a lot of the AI headwinds around November, December slightly die away in terms of rhetoric. But there are some people saying, look, we must be investing more in AI. We've got to keep this up because we've got to be the leader versus China. We can't let China be AI dominant. But then you've got others who are sort of a bit neutral, and others who are saying, look, we haven't seen a benefit to AI yet. So in all reality, a mixed bag, and nothing good or bad there, I don't think. But actually, on the sort of the new upcoming industries, I know it's not upcoming, but compared to my career, it is.
Yeah.
When we're talking about cryptos and stablecoins. So we've had lots of sort of pilots of blockchains and things, trying to make them a bit more global, a bit more, I suppose, government, to keep the governments more happy with sort of some new blockchains. And actually, we're moving from pilots to live here. So this, I think, is a really big thing where there's been a lot of talk about stablecoins, and the fact that its leaders talking about stablecoins and all the great and the good of the world means we're finally gaining traction there. So for me, it's good for global trade, good everywhere, but actually good as we're talking about countries trying to get away from the dollar and get around the dollar. I'm sure most stablecoins will be based on the dollar, but still it's a way to really try and boost that trade without it needing to run through the US.
Okay, and what about commodities?
Yeah, so commodities, again, this is sort of, apart from the Euro tech stocks, this is sort of the interesting thing, as I said, indices and the play on equities in general, it's pretty much everything's okay, everything's fine, no drama there. But actually commodities, we had the head of Saudi Aramco talking there, and obviously he's biased. He's talking, he's going to be talking his book, but he's saying global supply was an all-time high in 2025, and actually I think it's the International Energy Forum again is upgrading its forecast for demand. So with all the talk of electric cars, etc., efficiency, global oil demand is still as big as ever. So the CEO of Aramco has been saying that supplies are lower than the 5-year average is. And actually that the buffer, how much supply buffer we have for shocks, is down at 2.5%. It needs to be 3%, 4%, 5% in reality. So that's sort of his perspective. So
haven't people been saying that there's too much supply right now?
Yes, they have. And until this week, I was sort of believing that. And again, wasn't really a driver for me to be thinking oil might go higher. But actually this week, we've seen that the OPEC producing countries are almost 1 million barrels under their quotas. So their supply there is dropping.
Yeah.
And we've seen that Russian oil, which, there's no problem with supply, but it's all stuck at sea. So we've seen a 15% increase in oil that's just stuck on tankers with nowhere to go.
And have any other commodities been talked about at Davos?
Not directly, but what I'm taking, again, talking about this sort of the need and the want for countries to almost to have a bit more security. This doesn't just mean in defence, it also means in sort of supply chains and just making sure they've got enough sort of stored of everything. So for me, what this means is, previously for all commodities, you can for the last 20 years, you can pretty much just go to international markets and get what you want. So now countries are wanting to safeguard their own supply. That means less supply is flooding the international markets. And also generally with protectionism comes inefficiency. It's not good for global trade as much as leaders want to do it. So I'm sort of got the idea that maybe it's not a commodity super cycle, but certainly commodities they've turned a corner. Where again, due to this protectionism, due to the lack of supply, we've seen out of all the sort of major traded commodities, I think there's about around 20 to 25, we've only seen 4 of them down in the last 3 months. The rest are up. I think it's like sugar, cattle, coffee and cocoa are down. But coffee and cocoa have historically been
They were very high.
Yeah, through the roof recently. So this is almost, I think, the most interesting thing that's sort of developing, as I said, with indices, pretty static. It's sort of that the geopolitical tensions, geopolitical risk premium. Is that risk premium going to come from commodities?
Alex, thank you so much for all the valuable insight. We'll catch you next week and talk about what happened at the end of Davos.
Thank you.
And thank you so much to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.